right, everybody. Once again, I have got another great guest on the Hey Docs podcast with me, Eric Jacobsmeyer. Eric, I am so excited to have you on the show.
Thank you. I'm excited. This will be really fun.
So, one of the ways that I like to start us off is to have my guests just tell a little bit about themselves, a little bit about how they got into our industry, and then a little bit about their business. So, do you mind starting us off?
Because first off, I want to really thank you for what you're doing with this in the ortho community. I think this podcast is really good. I think it will help them avoid a lot of mistakes that can be avoided if they just have a little bit more knowledge when they
Thank
get
you.
things started. So kudos to
Thanks.
you.
Yeah.
And in some way, I feel like I'm at the big boy table where I'm talking with Jill Allen, who's been in this industry for a while, Platinum Plus Lounge or something like that. So I really appreciate
Yeah,
the invite. So good.
absolutely. Absolutely.
So CFO Orthos probably hasn't been around as long as your company, but so my business partner, Shane,
Mhm.
maybe I can even explain a little bit more of our background a little bit, but we're actually neighbors. We live on the same street here in Kaysville, Utah. And I had a firm where I was doing a lot with family offices at the time. And so I did a lot with like consulting and things like
Mhm.
that with these wealthy families. And that was growing and Shane was looking for another job. And so I recruited him on and we had a lot of fun traveling around and having fun with these wealthy families, doing estate planning and financial planning and acting as CFOs for these large companies. And even one year we started like an accounting department in India. So we spent
Wow.
some time in India, which was really cool.
Wow.
And so it was a fun time, but the one downside is there's a lot of drama in those those
Oh,
wealthy
I can
families. And
imagine.
so that got a little old pretty quick. And so we decided to pivot and we had a lot of clients, orthodontists and dentists. And so we pivoted and we decided, hey, we're going to make this our focus. And in fact, we even bought some dental offices with the group, a couple of dentists. And so we were the back office running all the financials and payrolls and really got our feet wet and into the nitty gritties of the operation. So that was a great stepping stone and learning. And we've since sold those and it was a good experience, but things continued to grow and grow. And so now CFO Ortho is pretty much we do a lot of bookkeeping and payroll and tax planning and everything in the dental industry. We're focused on orthodontists. I would say probably 80% of our clients now are orthodontists, but we're in every state now and loving it. It's a great,
Yeah.
great industry, great people that we get to work with.
It sure is. And, why I have chosen to, I've been in this over 30 years now. And with my business is just over 17. Gosh, it's 18 now because it's March, which is starting into my 18th year. Nuts. And you're exactly right. The people that we get to work with, we're really, really blessed. And it's a lot of fun. And what I have really appreciated about working with you and Shane and the team at CFO is you guys do start and work with a lot of my newbies, my little baby chickens that are getting going, and
Mhm.
it's so much fun to know, number 1, that they're taken care of and that you aren't throwing information at them that's way over their head and you're growing with them, and I think that's probably one of the key things when I give referrals out, when I talk to my clients about certain people. I've definitely vetted who I am saying and giving my stamp of approval to that this is a company. And what I have really appreciated about you guys is that I know you're easy to talk to. You're getting them started. You're getting them on a good path. And not only is it scary and hard to look at doing a startup business, but then you throw accounting into it and you're like, what? Chart of accounts? What?
Yeah,
What do I do with
seriously.
the tax returns with all this stuff that I just bought? And I am going to take a loss. And is that good
Right.
or bad? So thank you for just being here in our industry and being willing to work with a lot of our younger docs.
Yeah.
It's been fun.
It is. It has been fun, and it's always interesting because a lot of these they almost have to wear multiple hats as a professional, operations, business, and they just don't go to school for all that stuff.
Yeah.
And they really do need some hands to help them out and get
Yep.
things going.
Yep.
So I think
Yep.
that's awesome.
So as I was thinking about, gosh, what could we talk about? And oh my goodness, I probably came up with 5 different things. One of the things that I thought would be good, and I know we had talked a little bit ahead of time to make sure you were good with this too, but I want to talk a little bit about retirement planning a little bit and what that looks like. And I think some people might be like, wait a minute, Joe, this is a podcast for startups. And right now I'm just trying to figure out how to run a business. But I think it's so key for us to, like in anything in life, really be thinking about the path that we're on. And not that we can't always recorrect, but I think that it's good to just think about from the very beginning what retirement looks like and what that journey looks like. So, do you mind if we spend a fair amount of time talking about that today?
Yeah, no, that's a great topic and something that one thing in our office, so I'm a CFP, but we don't manage assets. We don't sell insurance or annuities or financial products. And so a lot of clients, just because of our background and our experience, just come to us and ask us, hey, how am I doing in retirement? Or do I have enough for retirement? Or what should I be thinking about? Make that independent where we're not trying to sell them a product, if that makes sense. We're just
Yes.
trying to just put ourselves in their shoes and say, hey, this is what we would do if I were you. So to kind of answer that question, maybe I can back up a little bit because it is a complex topic. It's like when somebody comes to me and says, hey, do I have enough for retirement? I was like, I don't have a clue. There's a lot of things that goes into that answer. It's not a one answer or one sentence answer.
Sure.
Obviously, it's more complicated. And the best way I can explain the environment today is maybe even backing up about 30 or 40 years to understand what retirement was like back in that time. Because back then, the country had 80% of its retirement plans were pensions. Okay. So an employee would go to a company, they would work, they'd get a paycheck. And then this company, and they were withholding all their taxes, saving all this retirement on the back end of it. And then they retire after 25, 30 years working for it, and they continue receiving a paycheck. And it's a little bit less, and they get Social Security, and it's not really different. And there's really not a lot of financial knowledge required back then. Fast forward to today, where like less than 10% are pensions or more are like 401k plans, where it's up to the employees or the staff or the owners of the business to put money in to save for this grand day what they're going to retire and have to not work and support themselves for the rest of their life with the money that they've saved up. That's a drastic amount of financial knowledge you need to have, like where to invest, how to invest, the tax laws. There's just a lot of complexities to it. And so that kind of the environment we're in. And honestly, we're not doing a good job. And that's why the government's been a little bit concerned. And so there's been a lot of legislation regarding retirement. And so there's that last year, there's the Secures Act is what they put in place. And I honestly can't even tell you what, there's always acronyms in the legislation. I think it's Secures Act means I don't know. I can't remember off the top of my head. But anyway, it's related to trying to improve our community's retirement scenario. And so the government's been throwing out all these legislations to help one, get people motivated and incentivize people to start saving for retirement, because that's really going to hurt our community when we have people that are retiring and then they run out of money. And how's that going to impact the economy? So the Secures Act, I'm not going to go through all the legislation. I'll focus on the ones that are probably more pertinent to our clients as it relates to what they should be thinking about. One of them is automatic enrollment. Okay. So this is something that's starting actually any plan starting this year in 2023, any retirement plans that are starting. There's this new law that requires the 401k plan to start enrolling all their employees in automatically, and they have to start withholding 3% of their compensation. Okay. There's some exceptions. Good thing with your new clients and the newbies that are all stressed out about life and everything. There is an exemption for them. So they're good for about 2 or 3 years. 3 years, I believe, is the rule right now, where they're exempt from this new rule. But after that third year, then yes, they do need to start setting up these plans and putting them in place. And it's a mandate. It's a government mandate, which is a big thing. And so there's this 3%. And then what happens is there's this escalation rule that in 2025, I believe, they're going to start requiring these practices to start putting not only 3%, but having the employees put an extra 1% every year until they get to 10%. Jill, you and I know that employees and labor, when you start shrinking their what they're getting home, there's a lot of concern, even when you mess it up by $25 or
For sure.
something with these employees. You're taking out 10%, you're going to see some backlash. You're going to say, yeah,
Mhm.
hey, I can't make it, or I need a raise, or there's going to be a
Mhm.
lot. And to combat that, a lot of these orthodontists are really going to need to start putting their story together so that they're not sucked into this. Because the reality is the employee needs to see this benefit as a whole. It's not like the orthodontist is going to be paying less. It just means that they're having to put more of that towards a retirement plan, and they're not going to, they still benefit. It's just a long-term benefit. It's not the
Right.
immediate benefit right
Right.
now. So having a good story is going to be important for these orthodontists to help them and start communicating so they have a big picture of that retirement scenario and how they need to start saving more. And this benefit is a benefit 401k, and they're matching it, and there's extra costs that are going to be for the orthodontist. So increasing their pay by 10% plus maxing and all that other stuff isn't feasible for the orthodontist. So having a story and having that communication is going to be important.
Yeah, that's
So,
great.
so accelerate, like the automatic enrollment's one of them. Another important one is the catch up, the amount people can put into 401ks. They've really beefed that up. So I think in 2023, there's really components. There's the employee portion of it that goes into a 401k. So that's in last year, it was like 20,500. 2023, it's 22,500 if you're less than 50. And then if you're over 50, they bumped that up to 7,500. So if you're 50 or older and you're putting into a 401k, just the employee portion of it's like $30,000, which is really cool. And a lot of orthodontists, when they're trying to sock away for retirement, are also putting their spouses on their payroll. So
Sure.
they can do 30 and their spouse can do 30. So that's 60,000 that they can defer, which is awesome. But what they're now doing with this new Secures Act is anybody that's over 50 and doing that catch up, they're going to start requiring that go into a Roth 401k, meaning they
Interesting.
don't get the defer. Yeah.
Mhm.
So they're trying to, I don't know what methodology they're coming up with and why they're doing that, probably just to get some of the tax on that money instead of deferring all of it. But it's not a bad thing, to be honest, because when you're looking at a retirement scenario, there's really three buckets in individual ones. There's the deferral bucket, which is your 401k. That's all the money that you're deferring. You don't have to pay tax when you pull it out in the future. There's the taxable, which is like a normal brokerage account where you put money in and it creates dividends and you're having to pay income on those dividends and capital gains and things like that. That's that bucket. And then there's the tax-free bucket, which is that Roth bucket, which you put it in, you pay the tax now, but it grows and grows, and then you'll never have to pay tax. Cross our fingers. Hope we won't have to pay tax in the future. So those are the three kind of buckets you want in the future. Because then in the future, if you say you had 3 million and it was all in deferred money and you needed $100,000 out of that account, you're really going to have to pull out $140,000, pay the tax on it, get the 100,000. And so that quickly drains it if it's all in the deferred money. Whereas if you have pulled some of that out of deferred, some of that out of your tax free, out of your taxable, you can keep your tax brackets lower in retirement and the money goes longer. It lasts longer in that scenario. So I think it's a good legislation, but you see what the focus is of the government, that they're trying to get more people motivated and making people start saving for retirement. And so knowing these laws is going to be important to kind of, one, make sure that you're abiding by it as an owner, but also
Mhm.
saving for the future for yourself will be
Yeah.
important.
Yeah. And as you're saying this, I'm just thinking as you're talking about get your story straight. It's not like we're coming up with a story. It's really how do we educate our employees on eh, what is happening to us as business owners and what is out of our control. Because I think so many times there could be this perception that, oh, my employer is going to force me to save 10%. And it's not the employer,
Right.
it's the government that is going to be doing this. So if you don't like it, figure out what you need to do with your government. But I think I really appreciate that you're talking about this. And I love the idea of us as owners, us as orthodontists, we have to first understand it on our side. And I know that's where you and your team really can come in and help. And then it is our responsibility to then let our employees understand what is going on. And I think that's hard because
Yeah.
sometimes this is all new and there's probably going to be a lot going on. So just being prepared. I think that's what you're saying is there are things that are coming and we're going to need to be prepared for it. And we're going to also probably have to be prepared to have some harder discussions with our team that sometimes I feel like when I'm working with doctors, they're like, oh, I don't want them to know about this in my business. And I don't want them to know about this.
Right.
But these are some things that we're going to have those hard discussions. Cause like you said, we can't just be like, they're going to have 10% taken out. So I'm going to give them a 10% raise. It doesn't really work
Yeah.
that way.
No, it eats at your bottom line at the end of the day. So you want to,
Yeah.
yeah. And they just need to understand. And it is a conversation, like you're saying, it's being proactive because the biggest part of what I found, and even in Colorado, like where you live, the state's now requiring these retirement plans and you have to opt out of them. And so everybody's jumping on this bandwagon to try and get it. But the more you can understand it, educate them, the less likely you're going to be the bad guy at the end
Yeah.
of the day. And that's what you want to avoid as the business owner. Let's come up with a solution here instead of all of it dumps on the owner saying, this is your fault. You owe me more money. I can't continue working here
Mm.
because I'm not making them. No, you can. You just have to plan ahead. You have to
Yeah.
start budgeting and making it work.
I'm just going to throw this out. When I was in school, and that was a long time ago, but we used to have business classes. I don't even think, and I think nowadays, most of the kids in schools don't have business classes. And you have definitely younger generations have to go other places to understand something as simple as learning to budget and learning to manage money, especially when we don't live in a cash driven, physical cash in our pocket society anymore. It's so easy to
Right.
use something plastic. And if there's something when I pull up my bank account on my app and I'm like, oh, I still got $10. So it's really an interesting thing. And maybe some muddy waters that we're going to have to tread lightly into because you don't want to get too involved in your employees and what they're doing. But yet, on the other hand, I think we're going to have to protect ourselves a little bit. So that kind of
For
brings
sure.
me into my next question of what are some hurdles that you're seeing with practices? I know you just talked about some of them, but in retirement and coming years.
Yeah, I think one, just knowing what the government's doing, their mentality, we now know that they're going to be shifting this more to the business owner, right? So that we know that agenda is in there. That's how they're going to try and come up with a solution, pass the buck onto the business owners.
Forced
Right.
savings.
Right. Like we're gonna look good. You guys are gonna look bad. Let's go this route. That's how we want to look. But understanding that kind of prepares you just so you could be prepared. And so those conversations we're talking about are great. But understanding too is they're gonna need to start reorganizing and redoing a lot of these 401k plans to facilitate all these new laws that are coming out. I've noticed a lot of new clients as we brought them on. There's some 401k plans with profit sharing and everything else that just haven't been modified with all the new laws that have happened. There's these new comparability studies that make it so you can allocate more to the owner. So if they haven't done those things, that's really important the hurdles come because we don't know and we don't act. If we know and we act, then we can adjust and make it work. Some of the things too, and this is more with that new law that's coming out, the Secure Act, like student loans, being aware of, like, for example, if you're an employee opts out or creates the things where they don't want to contribute, you can still, because they want to do for student loans, they can do that, but you still have to match on those contributions. That's stuff that's not run through payroll. So it's hard to understand what's happening in their personal life and how do you track that. So there's going to be some procedures when we onboard a new employee or just communication with employees to understand, hey, do you have a student loan? Are you making contribution or are you paying it off? If so, great. That counts towards if you were making a contribution to your 401k and I have to match on that into a 401k for you. So those are certain hurdles you got to start factoring into your operation to make sure you're staying and keeping in the rules and just being aware of them. So I think those are one hurdles. And I think a lot of it is just making sure that you're budgeting because it is going to be an extra cost, unfortunately, for business owners. More people participating in these matching and the retirement labor costs and your P&L is going to go up a little bit, just knowing what's coming down the road.
Sure. Now, maybe you said this and I just missed it. Is the government going to be requiring employers to offer 401ks, or is it only if they have chosen to offer a 401k that then they are going to be mandated on some of these?
Yeah, there's some legislation that's still unclear, but
Mhm.
the discussion is that they're leaning more towards if you have so many employees that, yeah, you need to start. And some states are requiring that. Colorado's one of them. California is another one. So it's maybe not the federal government, but states are now starting. If you have so many employees, you're required to have
Mm.
401k. So I don't know if the federals fully jumped on that bandwagon, but it is coming in my mind. I think they're
Yeah.
going to start requiring it.
Wow. Wow. That's and as you said, when you look at P&Ls and you look at, that bottom line, and I know we're all striving, most docs are striving to have that 58% or, whatever that magic number is. The reality of it is we just are going to have to realize that there could be some movement there. And also maybe just to really advocate for running lean offices, really
True.
looking at who you have on your team. And I really believe gone are the days where we just have this plethora of employees and we're
Right.
just fat with employees where we just got so many of them. I think that we are
Yeah.
going to continue as we move into the future to just see really refined offices where we've got our key people there. And I'm not saying that we want to run so slim that, hey, we're so slim that we don't have to participate in this, but just meaning that I think when you look at every dollar counts and when you're looking at all the buckets that are on your P&L and what you're looking at, I think we're going to become even more aware. And I know you as the guardians of watching our what we're doing in businesses, you guys are going to be really there's going to be probably a lot more education coming down in the next couple of years than probably we've had in quite a while.
Yeah. I think you'll second guess, do I really need to hire that person?
Mm.
There's going to be some extra costs involved with hiring that person. So automation and everything else is going to be important. And if you have a lot of Invisalign, do you really need all that staff? And is there a
Yeah.
mixture in your operation? All that kind of stuff needs to be factored in as you're really figuring out what should be my labor cost. What's
Yeah.
that exposure there?
Yeah, for sure. So let's talk a little bit about tax law then. We've just really started heavy in
Yeah.
retirement. Everyone thinks, oh, retirement is fun and games and golf and drinks.
Mm,
Let's talk a little bit about tax. What do you see coming down the future with that
yeah.
when you're looking at where we're going?
Yeah. No, there's been a lot of discussion. There hasn't been a lot of action yet, just because kind of have the different parties really not agreeing on things. So nothing substantial. And there's a lot of things outstanding, like R&D credits that impact our orthodontists that are still in the hopper that they think are going to pass once everybody can pass a law that will
Mhm.
be included in that law. So those kind of things are outstanding right now. But I think one thing to note for all of our clients and is that the government, the IRS is really beating up, like they're beefing up their audit team and they're putting a lot of money and they've been behind so far up to this point in time and just catching up. But I think they're almost getting caught up and their focus is to start audits, is to really start getting and auditing people. Unfortunately, orthodontists are a great target. They're in that upper bracket per se. And so one thing I would recommend a lot, just not so much a tax law that's being passed, but just understanding the tax laws that are in existence. And if there's anything that you're concerned about, make sure you're working with your CPA to say, hey, am I dotting my I's? Am I crossing my T's? Do I have the right
Yeah.
work papers in place? Because I promise you, audits are going to start coming and you want to make sure that you're not just doing stuff because you heard it on some forum, social media, Facebook. And I don't know if you like the
Oh,
same thing doesn't
I see
apply to
them.
the other person.
The armchair CPAs.
Yep, yep. So you just want to make sure you really know your scenario and what makes sense for your scenario. So
Yeah.
that would be one thing I would say. The other one I would say is there's a lot of laws with this new, they call it PT, pass through entity tax. I don't know how much you know about that, but basically
No, explain it.
businesses can now make deductions of their state payments, like their state income tax payments on their businesses, which is good because right now on your individual return, if you were to file your return, you can itemize and you can deduct up to 10,000 for state taxes. That state taxes includes real estate tax and some state taxes. usually you're always over that 10,000. So you're limited on what you can deduct there. So this new rule, it really opens it up so you can take that and just deduct it on the business return if you make the elections. And so a lot of these people that are in California and New York and these high income tax states at the state level really can benefit. Even Colorado has a great program. So you pay it at the business level, it's a deduction, and you're saving quite a bit in taxes by
Yeah.
making those elections. It's a new rule that just happened this last year. Most of the states, I think there's 10 that haven't done it yet, but most of them do. And it's a confusing area. Honestly, that's been the bane of our existence during this tax
Yeah.
season because we have some forms that aren't even done at the state level. So it's like we can't even file these things. So you got the client asking for the tax return, and then you got the forms not fully completed yet. You're
Right.
kind of in a pickle, but it's definitely worth the time to evaluate and make sure that they're doing that because it does add up those deductions, being able to deduct that state taxes.
Yeah.
So those would be some things to
Yeah.
consider there.
And I think I just want for our listeners out there, I think this is why it is so important. And I tell all my docs this. It is so important to have somebody that understands our industry, not just a friend of the family that has one step above TurboTax, does taxes. When you will be making a lot of money, and there we have to be looking for legitimate ways to negate some of those taxes and whatnot, and just be aware. And I know I get asked this a lot, Eric, but I have docs all the time say, Jill, do you think that I need to have somebody that's in my state? Are they going to be better? Now, I know the answer that I give, but I would love to hear what you would say on how important you think that really is to have a financial advisor or CPA in your state or not.
Yeah. No, you'd want somebody that understands the state. That is important. I'm not going to discount that. But most people can quickly understand the state. If they understand, once you've done it in one state, you can apply it and understand the other state. So we help out clients in all 50 states now. And
Mm.
so we've had some growing pains and we've learned from mistakes in some areas. But for example, in Tennessee, you don't want to set up S Corps because they have this huge corporate tax. And so you have these little nuances in every state that you kind of have to be aware of. And so I would say, yes, it is important to have a CPA that is fluent enough to be able to identify the red flags and the specific state requirements and what to avoid. But other than that, honestly, you can probably, it doesn't take much. You just need somebody that actually cares enough to really dive into the details and research it enough yeah, to
Yeah.
make the wise decisions.
Yeah, that's great. And what I normally say is nowadays almost all of our banking is done online. And if we're using QuickBooks or whatever your choice of accounting software is, usually your accountants can log in and get your information and look at what you're doing. I have found over the years it does not seem like it's as important to have somebody that can physically come in and do your books every month. And I know books and accounting and see that the tax component is a little bit different, but I think that it is important. I think this is what you were saying, to make sure that if you are working with somebody who is out of the state, that they understand the laws of the
Right.
state that you are in. And I think if you were to maybe tell, if talking to our audience that maybe a little bit younger out there, maybe this is their first rodeo when it comes to picking a company that they're going to hopefully build a relationship with. Could you give some tips or tricks on some things that you think they should be asking to find out if they're going to find a compatible CPA firm that they want to work with?
Yeah. I think that the biggest thing they should really have is somebody that's responsive. They're going to call them, that they pick up and that they respond to an email.
Yeah.
There's too many CPAs that are so busy out there and probably have way too much clients that they're not able to really
Mhm.
add that value. The value is, hey, I have a question. I want to talk to my CPA and I want to get an answer that's specific to my situation. So I would say responsiveness is key. And if you're able to communicate and have that somebody that's going to call you back, even if they're busy, to call you right back and get something, that would be my number one if I were in an
Mhm.
orthodontist shoes. And then the other important thing, just to kind of make sure they're understanding the structures that are required, like the entity structures. There's
Yes.
too many times where The orthodontists think it's structured one way, the attorney did it another way, and the CPAs think it's another way. And so nobody's talking. And so you want to make sure that somebody that really understands the full picture. And there's
Mhm.
too many times where we have too many advisors and everybody's thinking one way and not the other, and they're not communicating. So you want a CPA that's going to communicate with those different parties. And I think those are the responsiveness and being able to communicate, play in the sandbox with other advisors is key in my mind.
Yeah, that's great. So as we start to wrap up, I just want to make sure that was there any additional points that you wanted to make on either tax law or retirement? Is there anything that as we were going through, you're like, oh wait, I need to, or I think I should have said this or that, as we're finishing up here.
There's lots of things that swim through my head when you ask that question, but I would say probably if I were to say, hey, what would I hope they would take away from
Mm,
this meeting? I would say first, be aware of these new laws that are coming and how it's
mhm.
going to impact, and work with your 401k, the TPAs, your CPAs, your accountants, because that communication is important with all the things that are happening this year, and they're even going to get more complicated in the years to come. So that would be one thing. As it relates to retirement, I would say as orthodontist, one of the things, if there are three recommendations I would want to give them as it relates to that, is to start early and be consistent with the retirement plan. That is by far the best advice I was ever given, and the best advice I can give anybody else is, even though you're swimming in student debt and swimming with your loans out there, just get in the habit of doing something,
Mm,
even if it's small. I don't care what it is, but just get in the habit of being consistent and then beef it up as the cash flow comes, because it will come
it
and it
will.
does come.
Yeah. Yeah.
So I would say being consistent would be one of the recommendations. The other one is just budget. A lot of times that's like a swear word to a lot of people, like the budget. But the reality is, like, having a budget, it doesn't have to be like nerdy, like an accountant budget or you're doing every little penny, but at least understanding your burn rate and what it should look like. And when it gets out of line, and just being aware of that is so critical, because it doesn't matter how much you make as an orthodontist, it's how much you save. I have people that make a ton of money. They also blow all that money. And
Mm,
so
mm.
there's a catch 22. You can make a lot and you can always think, what am I going to spend it on? But being diligent and having that self-discipline to save some of that for the future is key and important. And then the third thing I would probably say is not to use selling your practice as your retirement plan. There's
I just want you to say that one more time.
yeah, we do not want the tracker. We do not want all the eggs in that basket when you sell that
Yes.
practice. 'Cause
Yes,
that
yes.
you will be sad, especially if you're selling to some OSO down the road and they throw out all these millions of dollars on paper and get some of that in cash and all of this is the fantasy. There's too many people that get sad because it doesn't pan out like that. Yeah, I hurt. There's too many times I've seen them just hurt because they're putting their eggs in that basket of getting all these multi-millions of some future sell and some equity event and something like that. And it doesn't pan out like they think. And their retirements, they've missed the boat, and there's only so much time you can save for that. Otherwise,
So
you just
true.
keep working longer and your retirement just gets shorter and shorter if you don't do that. So I would say planning and saving. And so that when you sell to that practice, whether it's another orthodontist or to a OSO or whatever exit plan you have, don't have it all rely on that sale. Have it saved in retirement and have your ducks in a row. So that's not the major component. That's the gravy on top
Yeah. That's
kind of a scenario.
such sage advice right there. I always use the analogy of a portfolio, right? We've got our practice on one port of the portfolio. Hopefully maybe we got into some investing, and then maybe we did some property, and we really want to have our assets distributed. And you are so many of my docs, and I've seen this because I work on both shoulders, right? I do a lot of these startups. I work with a lot of docs that are on that 8 years to retirement track, and they have been head down plowing along, which is great. But when we get to the end and that's all that's left, and now you're trying to put your 20 years worth of hard work and a dollar number on that. And unfortunately, usually the dollar number isn't even close to,
Right.
what your sweat equity was in that.
Yeah,
And
exactly.
and you're right. It can be a really sad situation to be in. I could not agree with you more. And I think for any of my younger doctors that are out there listening, it feels impossible, but just get somebody to give you advice, get into some, even if it's very conservative ways of saving money, whether it's truly just in a savings account or whether it's whatever it is. I won't even get into that because I'm not trying to give advice here, but
Yeah.
just being consistent is going to mean such a difference, and as I always tell my young docs, when we start off, you are not making any money at all, and you're not gonna be making any money for a while, but you will make money, and it will turn around, and like the snowball of what your business will be, that can also be the snowball of what your wealth can be as you grow with your company.
Yeah, agreed.
Thank you so much for
Yeah.
being on the show. I know that there are people who are got their pins out and they're like, okay, I know Jill's always going to finish up with, how do I get a hold of him? Would you mind just letting us know where people can find out more about you, more about the company, CFO Ortho? Where are you at socially? Can you just drop us with all that really good information?
Yeah, unfortunately, we're not super techy, but we do have a website. Like Google us. They call it a landing page, I think is what they call it. That's- It's a website, but it is a legitimate business. So CFO Ortho, yeah, just there. And then they can reach out to all our information is just on there. They can click on and they can reach out to us and call our office. And we're, like we said, we try and pride ourselves in being that responsive kind of a CPO. If they call us, we'll call back, we'll set up an appointment. And even if a lot of these orthodontists, which I invite the new ones too, just to call as they're nearing graduation and just
Yes.
getting some questions. We love those questions.
Mm.
We're okay. We're not going to charge them. We just want to
Yep.
help them because there's a lot of decisions to be made. So we love those kind of questions or those new orthodontists just trying to, what do I don't know? Or
Yep.
help me understand. So we love that kind of stuff. So
Yeah.
keep sending them our way. We'd love to chat with them and
Yeah.
get them in the right direction there.
And again, which is why I really have enjoyed working with you guys over the years because I know that I can have a doc and I can say, hey, reach out to Shane or Eric or whoever's answering the phone over there. And you guys will answer questions. You have a heart like I do. We want to just give really good information. And I feel the more information we can get out there, it only helps our industry. It only helps the people that we are talking to. And ultimately, I think it helps us. Just be a
Yeah.
good person. Just give it good
Yeah.
advice.
No, agreed. 100% agree.
So, as we finish up, one of the things that I like to do on Hey Docs is do something called the speed round. So, are you ready to accept the speed round challenge?
Yes.
All
Do it.
right.
Yeah.
Describe your style in one word.
One word, I'd say doer would probably be the word that comes to mind.
I love this question because I get all kinds of answers. That is fun. I love it.
Yeah.
All right. Anything you are listening to or watching right now?
I usually our kids are reading all these books, so I try to at least listen to them just so I understand what they're listening to or reading. And one that's Way of Kings is the one that one of my kids, it's a huge book, but it's actually pretty fascinating.
Huh,
So Way of Kings is one that I'm listening to right.
I love that. That's great. How about something you do just for you?
I have a bunch of fruit trees in my backyard. So I love going back there and pruning and just when it's harvest season and trying it, all that kind of stuff. So that would
Oh,
be my little oasis, if you will.
oh, that's great. Being out in nature. That is my thing. Though I can't make anything grow. So good thing I don't have any trees or at least fruit trees in my yard. Do you have a hidden talent?
My kids say I make some pretty mean shakes, milkshakes. So that's
I like that's a
maybe
good
something
talent.
there.
That's a good
You
one.
know,
And then if you were to share, if you had a big, hairy, audacious goal, anyone you'd be willing to share?
very audacious goal. Or anything away from the office would be great. But I would say I've always envied people that can do those ultra like trail running stuff and be
Mhm.
able to run. I don't know if you know any of those kind of
Yeah,
people, but
yeah.
Usually I can do a lot during the summer and then I hit at the end of the year and I'm always out of the office, tax season hit, then I get back into shape and all that kind of stuff. So I would say that's probably one of my goals is to be able to do something like that someday would be cool.
That's wonderful. I think that's a great goal and just keep working at it, right?
Yep. Yeah,
So
I'll try.
thank you so much for being on Hey Docs. And I just so appreciate what you guys are doing. I know it's such a benefit to so many of my clients. And again, thanks for being on the show.
Thanks for having me. This is awesome. Appreciate
Yep.
it.
Yep. All right. Until next time.
All right. Thanks a lot there, Jill.